Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and if you're interested in subscribing, definitely subscribe. I'm going through the comments section. I'm going to answer some comments here, give you my opinion. I know there's a lot of people talking about Contango. Contango's going down, yes. Why is it going down? I'm going to tell you, I don't exactly know why. Usually what happens in a merger is you have an acquirer and an acquiree. The acquirer usually pays money for the acquiree, and the acquiree gets usually a premium. So the acquiree goes up, the acquirer goes down. And I don't know in this merger who the acquirer or the acquiree is. So you've got Contango merging with KKR. It's a merger. They're going to merge together. Now, you got to keep in mind, John Goff, the billionaire who's on the board of Contango, he's got 18% or 20%, something like that, of his own money, insider holdings of his, in that company. Now, I saw that they both unanimously voted for the merger. Now, he's on the board, so he voted. And he has a 20% stake or 18% stake. It's probably... I don't know what the market cap is, but he's probably got $250 million or more in it. So a good chunk. And he's not going to do something that's going to hurt his holdings. That's my opinion. So even if we were to take a short-term hit, what he's thinking is long-term. And it's the same thinking as me and what everyone else should have in the community here. We should have a long-term perspective. And what he's seeing is exactly what I'm teaching on this channel. We've got ratios, and ratios, the gold to oil ratio, oil is incredibly cheap. It is incredibly cheap. So what do you do if you're an investor? You identify the ratio, and then what do you do next, right? We know that the ratio is cheap. We look at the charts. We've bottomed and we're coming up. You buy into strength. Oil is strengthening. You want to buy into that strength and you want to accumulate assets. So what did Contango do? Contango at the bottom was accumulating assets. They merged with a couple of companies at the bottom. Was it MCEP or whatever? I'm trying to remember the name of it. And then they also were buying assets. John probably said, oh, how can we accelerate this further? How can we go even further? Well, we have to get bigger in order to gain more access to capital. So what they did is they're going to merge with another company. They're going to get bigger. And then they're going to get more access to capital. They're going to keep the same game plan, except they're going to be bigger. They have more access to capital. So what he's doing is he's getting bigger. He's got to get bigger to get more capital. He's going to get capital cheaper too. The bigger you are, the cheaper the capital. So he's getting bigger. He's going to get more assets at the bottom for cheaper. He's doing exactly what his plan is, which is to acquire assets on the cheap. Then he's going to develop them when the price goes higher. So I think it's good for shareholders. Now, there could be lawsuits. When QEP was purchased by Diamondback, there was a lawsuit there. Almost every time you have a merger or a buyout, you're going to get lawsuit on the acquiree side. The acquiree is going to say that there's a fiduciary responsibility for the acquiree, which could be Contango in this particular case, that they sold too cheap. We should have got more. So there's almost always a lawsuit that ties with we should have gotten more. Should we have gotten more? I don't know. Why would John, who owns 18% of the company, short himself? He thinks that there's way more value to be created in this merger than leaving Contango as an individual company. That's his viewpoint. Now, my viewpoint, I don't know if I know everything. I don't know if I know enough about all this. I don't know much about independence. I don't know much about all of the assets that Contango potentially could have sitting inside the company saying, well, we could buy this, we could buy this, we could buy this. We just need to get bigger. We need to get bigger now. So maybe they take the short-term valuation hit for a massive long-term value appreciation. I don't know everything that they have on the table. And I don't know if you can read it on the internet to figure that out. Because there's things behind the doors that these guys are actively talking. They've got strategies that they may or may not share with everyone. Like, I'm sure they're not sharing that these assets are good that they've got that they want to accumulate and be like, oh, these are the ones we want to accumulate. And then eventually these people will see that and charge a higher price. They're probably not sharing that. And that's what has me curious is like, what do they have that they want to buy? Because they're pretty aggressive on this merger. They want to get this done. And I guarantee you're going to see accumulation of other companies right behind it or assets. So he's picking things off when it's cheap. He's buying into strength. He's doing exactly what I would do. So why would I sell out of the company on someone who's got, I mean, this guy's, he's a multi-billionaire. He knows what the heck he's doing. And he knows what's cheap. He knows how to value assets. He's on a board of a very small company. So basically these guys are cheating. They've got basically mentors on there that can say, this is how you make money. Go do it. Run it. He's got CEOs and all these other people. I mean, basically they're going to say, this is what we're going to do. This is the direction we're going to go. Run it. Run this play. Run this. Run the company this way. So I'm gonna hold on. It's a low leverage company. They're going to leverage up probably a little bit. They're going to take on some debt probably is my guess. And they're going to acquire a bunch of assets at the bottom. He thinks, and I've read this in articles, he thinks, John Goff, that oil is incredibly cheap and that oil is going to have a massive move higher over the long term. I agree with him. I agree with that outlook. And if you've got someone who's a major insider holder, who has a lot of stake, a lot of skin in the game, a big stake in the company, he's going to align with me then, and I'm going to align with him. We think very similar. So I'm holding on. I'm gonna ride this thing higher. I'm going to do nothing. Now, if you guys want to buy more shares, that's up to you. I can't give you guys advice, but I can say that I accumulated a lot when it was very cheap. This is one of my bigger holdings. I overweighted this company. I wanted a low risk because they weren't leveraged up as much as some of the other companies. And if you get into problems, I don't want the leverage. If oil didn't rebound as quickly as we thought, I don't want that. I don't want that leverage. So I went into some highly leveraged companies and I went into some lower leveraged companies. This was a lower leveraged company. I still think it's going to do very well. And if they can acquire assets at the bottom, all the better. If you guys like this content, give me a thumbs up. Hopefully it helped you a little bit. And thanks for listening. This is Finding Value.